XRP is at a critical moment right now, and this video is going to break down exactly where it stands, what just happened after the latest price rejection at $2.3, what the ETF flows are really telling us, how the market-wide crash has impacted XRP, and whether Swell 2025 and the institutional news actually position XRP for a breakout, or if the charts are telling us something very different. And the reason you want to stick around is because XRP is one of the only major assets that is still up nearly 90% year over year, while everything else is bleeding right now. And yet it's facing one of the most important technical tests we've seen in months. So if you want to understand where XRP might go next based on facts instead of hype, keep watching, because this video covers everything from ETF inflows and liquidation data to macro market pressure and how historical patterns may repeat or break this time. Hey guys, you are watching Crypto Blogspot. I make unbiased crypto videos with no sponsor or influence. So if transparency matters to you, make sure to like the video and subscribe. And remember, this is not a financial advice, just information and analysis. Now let's get into it, because XRP just took a hit and the timing could not be worse. Bitcoin has crashed below $90,000 and that has dragged the entire market into deep fear. The average crypto RSI across majors is at about 37, which means almost everything is hovering near oversold territory, and the fear and greed index just flipped to extreme fear. In that kind of environment, even strong performers get punished. XRP slumped nearly 5% after falling to break through $2.3, a level that has now proven to be a structured resistance zone for almost a week. We saw a very sharp rejection, and what makes this move important is the volume profile, because this wasn't retail panic. This was institutional volume confirming the rejection. As soon as XRP tapped that $2.3 ceiling, we saw a 342% spike in volume at 14 UTC, 237 million tokens traded in that one wave. And then longs got wiped out. Derivatives data confirmed $28 million in liquidation. In 24 hours, $25 million of that was long positions, which tells you exactly what happened. Traders tried to front run a breakout into ETF hype and got erased. Meanwhile, the ETF story is a double-edged sword, because yes, the first US spot XRP ETF by Canary Capital launched with $58.6 million in opening day volume. In fact, it posted the highest day one volume out of over 900 ETF launches this year. But here's the problem. The ETF hype did not translate into sustained spot price support. XRP pumped and then reversed, the same way it always does around event-driven hype. And the market structure still reflects a short-term rebound inside a larger decline. And this isn't just opinion. This is coming straight out of institutional analysis like FX Pro, calling this pattern a short-term rebound inside a bigger downtrend. And unless momentum re-accelerates, the structure points towards deeper retracement. That means the next level to watch is $2.2, because that is the battleground. If XRP can hold that level and bounce with increasing volume, we could see another attempt toward $2.3 or $2.4. But if $2.18 cracks, the next structural support isn't until $2.02, all the way down to $1.98. And with Bitcoin's weakness right now, that drop is not off the table. But here is where things get very interesting. Despite the pullback and the failed breakout, XRP is still the single best performing major asset over the last 12 months. While Bitcoin is up just 2% over the same period and Ethereum is flat, XRP is still up 89%. In the last 365 days, even after dropping nearly 36% from its all-time high of $3.64 4 months ago. Meanwhile, Solana and ADA are both down more than 36%, and the meme index is down 78%. That means the riskiest assets are getting slaughtered and the institutional money is rotating selectively into stronger narratives. And even with the price drop, XRP remains the only major token still positive year to date. But here's the other side of that coin. XRP's superior performance comes with higher volatility. CoinDesk data shows XRP in 91% annualized volatility compared to Bitcoin's 44%. That means when things go wrong, they move fast. And one reason the pullback hasn't killed the bullish narrative is because of what happened at Swell 2025. XRP came into this event with heavy expectations, and for once, the headlines did not disappoint. Ripple secured $500 million in funding at a $40 billion valuation led by affiliates of Citadel Securities and Fortress, which is massive because those firms do not throw money at hype, they back scalable systems. Ripple then expanded RLUSD stablecoin use cases and announced plans for on-chain lending on the XRP ledger, which directly addresses institutional needs for yield generation and stable asset deployment. And it didn't end there, because right after Swell, 11 XRP ETF products appeared on the DTCC list. And while that does not mean SEC approval is imminent, it absolutely signals infrastructure preparation, much like when Ethereum funds quietly appeared on DTCC list long before approval. But here's the problem. History does not agree with hype, because XRP has finished lower after Swell in 4 of the past 5 years. Every single time the event pumps price, the move fades and XRP trades lower by year end. Classic buy the rumor and sell the news behavior. And the chart right now is representing that pattern almost perfectly. XRP jumped 12% after Swell and then dropped back under $2.4 and failed technical support. But now we are in this weird zone where fundamentals look stronger than ever, but macro sentiment is crushing everything. Because while XRP ETFs are pulling in hundreds of millions of dollars, Bitcoin and Ethereum ETFs have bled over $4 billion in outflows in just 3 weeks. Traditional firms like BlackRock saw over $2 billion in combined Bitcoin and ETF redemptions. Crypto whales are selling and the macro environment is full of monetary uncertainty, while retail sentiment is collapsing. The market is in extreme fear, and that is the worst environment for sustained altcoin rallies, which is exactly why XRP's resistance zone is holding so strongly. But here's the twist. The ETF data shows a very clear market rotation. While Bitcoin and Ethereum ETFs saw $4.2 billion in outflows, Solana and XRP ETFs saw over $500 million in inflows in under a month, with Solana taking $382 million and XRP ETF attracting $250 million in inflows on day one alone. So while the price is dropping, institutional interest is actually rising, and this is the strongest bullish argument for XRP at the moment. If demand continues building through ETFs while retail sentiment is depressed, we could realistically be looking at a massive supply shock later on. But until then, we need to be realistic. The path from here is threefold. The bullish scenario is XRP holds $2.2, breaks 2.3 and 2.4, and ETF inflows accelerate with real on-chain lending activity building, leading to a move back towards $3. Base case is XRP continues sideways, stuck between 2.2 and 2.5, while ETF approvals stretch into mid-2026 and investors wait for real adoption metrics. Bearish scenario, 2.18 fails, Bitcoin drops below 90,000, and algorithmic selling triggers a fall back to 2 or even 1.8, which is still structurally valid even in a bull cycle. The reality is, XRP is at one of the most important support levels of this entire year, and whether it holds or not will depend on volume at $2.2 and ETF inflows strength more than anything else. The difference between a breakout and a breakdown isn't hype anymore, it's data. Right now, the data says volatility is high, sentiment is shaken, but institutional inflow strength is undeniable. And that's why this next week matters so much, because if buyers defend 2.2 with rising spot volume and ETF inflows stay positive, we could be looking at one of the strongest midterm setups XRP has had in years. But if they fail, XRP could be repeating the exact historical swell pattern that has punished buyers every time. So keep your eye on that 2.2 range, on ETF inflows, and on Bitcoin, because in this environment, everything trades off Bitcoin. And while the entire market is sitting in extreme fear, price can reverse at any moment. And that is your full XRP breakdown. If you appreciate the data-driven approach, make sure that you like the video and subscribe, because this channel will always give you facts, not hopium. No sponsored scripts, no hidden promotion, just real analysis in real time. Thank you for watching, and I'll see you in the next video. So stay tuned.